Sustainable Responsible Impact Investing, SRI, is getting more attention as an effective way to improve our world and grow our portfolios. Total assets increased by 1/3 in the last 2 years to $9 trillion in the US. Yet some investors still think about the way sustainable investing used to be. Impact funds have really evolved since we began using them 20 years ago. It's time to rethink our assumptions. First, many think SRI funds are just a small part of the market, and it would limit their choices. The fact is, SRI funds are one of the fastest growing fund areas, with hundreds now available. They cover most of the market and the world, including large cap, small cap, growth and value, domestic and foreign funds. Some SRI funds are diversified and others more concentrated. This is no longer a niche industry. It's really gone mainstream. Myth number 2 is that SRI funds are mainly invested in small, environmentally friendly companies. In fact, SRI funds invest in all kinds of companies, including large multinationals. 80% of companies in the S&P 500 now publish sustainability reports. That's a big change. Myth number 3 is that SRI funds only do well in certain markets. The reality is that SRI funds participate in the same market trends as other funds. When growth is in favor, growth-focused SRI funds typically outperform. When US markets are trending, domestic SRI funds are usually the place to be. This means you can capitalize on these trends. That's what our upgrading strategy is all about. For instance, when mid-caps were in favor a few years ago, we owned Ariel, a mid-cap fund that excludes tobacco and handguns. When the trend favored large caps, we bought large cap Domini Social, which screens companies based on their social and environmental impact. In 2016, higher quality stocks did well. We bought into Parnassus Endeavor, which owns high-quality companies that are great places to work. And here's the big myth about SRI, that it doesn't perform as well. This has been repeatedly debunked. SRI portfolios perform just as well as conventional ones. There have been more than 2,000 studies since the 70s. And a review of this data found a positive link between sustainability factors and good financial performance. This is consistent with our own 20-year experience managing client portfolios. So don't let the old way of thinking about sustainable investing hold you back. Get the facts and start looking at how you can invest today for a better tomorrow. Thank you for watching.